Hi, everyone. Welcome to Analyze Your Trade, episode number 17 for January 2nd, 2018, our first show of the year. So tonight we will be discussing your trade ideas. And over the last few days, over 70 people submitted up to 5 symbols each. And we are going to talk about some of the most frequently requested of those. My name is David Kosmeter. I'm the creator of TimingResearch.com. And I've developed this show with Dean Jenkins of Follow Me Trades, and he is here to moderate tonight, so I'm going to go ahead and turn it over to him.
All right. Hey, thanks, David. And wow, 17 shows, man. We're getting into a groove here with this thing now, and I really enjoy coming to the show, to moderating, to hearing what the other panelists have to say. We got a brand new guy, Stephen Brooks, here tonight, so I'm really interested to hear what he says, as well as the other panelists. So there's no question this is going to be the best show of 2018 so far, right? There's just no debate about that. And if you notice, the indexes have not had a down day yet this year either, right? So we're just off to a phenomenal start, man.
Shut it down for the rest of the year.
Yeah, just book the wins and go on vacation, all right? But let's go ahead and start with the panelists introducing. Just take a minute or two, tell us who you are and kind of what your focus in the market is. And we'll start with you, the new guy, Stephen. Yeah, let us know who you are, what you got going on, man.
New kid on the block. Hey, guys, I'm Stephen Brooks. Thank you, David, and thank you, Dean, for having me. Super excited to be here. Really pumped. I want to wish everyone a happy and healthy new year. 2018 is going to be a rocking year. It's going to be great. Hope everyone's staying warm out there in this cold. In a former life, I was actually a professional baseball player. And since then, over the last 10 years or so, I've been a self-directed investor. And I specialize in teaching people now, and specifically teaching people strategies that require very limited knowledge with things like balance sheets and charts and really what's going on with interest rates. So they really don't need to understand much about the market, and really requires them to only understand very basic setups to allow people who don't really know much about stocks or don't really have a portfolio to be able to profit from it. So very excited to be on here tonight. Hopefully I can learn a couple things as opposed to just giving you guys my opinion. So super excited. This is going to be great.
All right. Hey, glad to have you here. And it's good to hear you talk about technical analysis rather than fundamental analysis. I went and got a business degree and learned how to do fundamental analysis, and now I'm a technical trader, right? So that just tells the story right there.
Absolutely.
Hey, Michael, we've been on together many times, but maybe not everybody knows you. Why don't you introduce yourself, our friend?
Mm-hmm.
Uh-oh. We got the freeze frame. A little connection problem with Michael.
Oh, you wanted me?
We'll jump. Yeah, Michael.
Hi. Sorry, it did kind of freeze up there. Hello, my name's Michael Filighera, and again, Happy New Year, and thank you, Dave and Dean, for including. Been trading since 1979. I've been an options market maker here on the Pacific. I've also traded in London, Amsterdam, and Germany before coming back to the Pacific here in San Francisco. My focus, of course, were options, and they were equities. But currently, I have switched over, and my focus is futures and more day trading. But I still carry positions and other things in a lot of the stocks that I've always liked.
All right. Very good. And it's good to be back with you, Michael. And Jim Kenney, we've been on once or twice before.
That's right.
So, yeah, go ahead and introduce yourself.
Sure. I'm Jim Kenney. I provide the content over there at theoptionprofessor.com, 7 DVDs that take you from the basics to intermediate and advanced strategies. I've been educating people in options for many decades now, and it's good to be here. And, of course, Happy New Year to everybody who's here tonight.
Yeah, great. Absolutely. And I'm Dean Jenkins, founder of FollowMeTrades.com. And I'm a trader. Right? I trade my own account, And I teach other people how to do it. I run a stock advisory service. I've got a live trading room. I've got some education. I'm a swing trader, not a trend trader. So when we look at some of these, we're in the middle of a long, mature, awesome trend. I don't want anything to do with it, man. I look for trend changes and try to catch the next move. So I'm a swing trader, again, stock advisory, trading room, not day trading. I like longer time frames, 30, 60-minute daily charts in trades, handful of weeks. But that's what I do. All right. Well, we got some good symbols. I'm excited about the symbols we got up here to take a look at. And we'll just do a round robin format where we'll call out the first symbol. Each of the panelists will offer their opinion on it pretty quickly, whether they like it, don't like it, or have no opinion. And, you know, any parameters they might have for a trade there, an option contract, a way to trade it. And we'll move on. We'll try and get through as many as possible. We'll pause after 4 or 5 symbols, and each of the panelists will offer their favorite current pick. And that'll be interesting. I'll have my pen at the ready, because we usually get some good ideas here. So let's just go ahead and rock it with the very first symbol, and that would be KR, Kroger. And we're just going to keep that same order. We're going to have you lead us off there, Steven. So what do you think about Kroger, man? And you can share a chart if you like.
All right.
Or just talk to it. What is best?
Cool. Awesome. So what I typically look for when looking at a chart it's actually kind of interesting that, Dean, you mentioned how, hey, you're looking for counter trend or swing trades, and we've been in a lot of trends, and that's very true. What I look for is some sort of a price extreme to then either take the other side or just have an understanding of where I am. So when I look at Kroger, I see it's very mid-range for the entire year. And to me, while it is up a little, about 7% over the last 5 days, it's very mid-range. It's not at a high price extreme. It's not at a low price extreme. So I say, no opinion.
No opinion, not interested.
Nope.
You know, I think that's important. You know, when I do education, we do these shows like this, people, you know, they're going to ask about Apple, they're going to ask about Netflix, right? Or whatever. And people seem to think about, you know, well, how should I trade Apple? And I think the biggest first question is, should you be trading Apple or whatever you're looking at, right? Go find a good setup, right? Go find something that's doing something new. That's my opinion. But yeah, nothing there for you on Kroger, Steven.
Nope.
What do you think, Michael? Where's Kroger at for you?
Well, as a technical analyst, I've always looked at a market through the eye of Elliott Wave. And I've been taking a look here, and the patterns are really jumping out very strongly, coming off of the low that probably was October. There was an October low just below $20. And that's a very bullish pattern coming up off of that. And so my initial view is that it should go up and create a new high above in December at 28.57, and it's almost there. Probably hold below 30 before it pulls back. And then it's going to look like it could probably pull back to about 25, and then I think it's time to buy it.
All right. Very good. Jim Kenney, the option.
Yeah, well, here's what I'm seeing. Kroger is a classic case of when things get really nailed and people start saying you're never going to use these things again. It's probably time to take your shot, because when it went from 40 or 34 down to 20, everyone was talking that Amazon had gotten into the grocery business and no one will ever go to a Kroger store ever again. And of course, that is not exactly what happened. So we went from 20 up to 28, which is a 40% jump, and that ain't bad. Now, where are you at here? Well, if you own it, you got a lot of resistance, I think, around 30, potentially, because there's a big gap. When the thing gapped down back in mid-June, it gapped down from 30. So it's going to go up and fill that gap maybe, and that could be an area where it could have some problems. So a hedge or a collar or a married put or something, it might be something to investigate if you owned it. If you don't own it, there's another gap down around 24.25 that was just mentioned, and it wouldn't shock me if it went back down there, because that coincides with the 50 and the 200-day moving averages coming in around 23.24. And obviously, as time goes by, as you're above that number, those numbers should be rising. So, 24, 25, 23 would be a buy zone possibly, and up here might be a time to protect it if you're in there, or just sit on your hands if you're not.
All right. Well, I'm an Elliottician as well, right? And I like to start with about 18 months worth of data and look at it. And what I see here on Kroger, and by the way, Kroger, there's a regional kind of grocery and apparel store here in the Northwest called Fred Meyer's. They bought Fred Meyer's. I'll never forgive them because that was like the best store in town. So the big conglomerate bought them. But that notwithstanding, what I see here on the chart is a really clear, this is a big, the big move here is down. Wave 3. We're in a correction. Wave 4 up. Here's the Fibonacci retracement zone, and it's in that zone. So it may continue up a little bit more, but the real next big move for me to look for is when it continues the original trend down, and we can project that. Once this ends, we can go project that with Fibonacci extensions. But it hasn't happened yet, right? It's still putting in new highs. So it's, for me, it is too late to go long. We're already in the retracement zone, and it's way too early to go short because it hasn't turned yet. So that'd be the next move to watch for, is the turn down. But again, you got to wait for that. That's my take on Kroger. All right, let's go ahead and pop to the next one, and that's SYNT. I don't think I had heard of SYNT before tonight, and I just love it when we get a brand new symbol. Who knows? It might be the next big winner, or it could be, not so much. What do you think here on Stephen, SYNT?
Yeah, so that's interesting. I had never heard of SYNT either. But looking at it, okay stock volume. It really doesn't have much options volume, so I'm not sure how many people are actually trading this. But again, one of the things I look for are price extremes. And over the last 5 trading days, you're looking at a stock that's down a little bit over 10%. To me, that is a price extreme. So again, I don't have a lot of lines. I don't have a lot of indicators on the chart. However, we're in a short-term price extreme. So, and I see volatility is ticking up here at the 63rd percentile. So this is actually a really good opportunity, in my opinion, to get some sort of a long trade. And you could do it by selling a put. This is a pretty cheap stock, so puts aren't going to be very expensive and aren't going to require a lot of margin. And again, you're at a short-term price extreme, which does say, hey, when after prices do sell off hard at an extreme, they tend to go higher rather than continue lower. So I actually think this is a nice entry for some sort of a bullish strategy that involves getting short a little bit premium here because volatility is inflated.
All right. So you like it?
I kind of like it.
All right. Syntel, whatever it is they do, you like it.
Okay. I love it.
All right. Michael, what do you think? Syntel.
I'm going to buy those puts from Stephen.
Done. Deal.
Yeah.
Well, if the vol's too high, I won't buy him, Stephen. But I actually think that the stock has come down in a really clean pattern. It's rallied back up, and my best count is going to be an ABC. It looks like the C wave finished last in December, and now it's starting its way down again. So I think it's definitely going to go and close that gap that it created. 20.
Yeah. I love it. We got a difference of opinion, man. That's what makes it interesting. It's like
it's the market.
Like, yeah.
It's like let's make the market excellent, Stephen. You're right.
Siskel and Ebert, right? It's like, well, what are you thinking? I love it, man. Jim, tiebreaker.
Yeah, these guys are in computer sciences, and they really tanked from 45 down to a very low price there. So it did bounce back, and I think I'm in agreement that it could roll over and try to go back towards 19. And it does have a good moving average coming in 200-day at around 1960, and that would be the only place I'd be trying to look at it at if it filled that gap. But again, it did fall out of bed, 45 area down to, I guess, 15 on April 20th this year. So something occurred here, and obviously it wasn't good because Tom, Dick, Harry, and all the other relatives definitely got the hell out of this thing when it started dropping at 45. And so there must have been something that occurred in the firm that would cause that kind of a drop.
I just love being a technical trader. And sometimes people, in the trading room or education or whatever, people ask me, well, why did it go down? And it's like the perfect setup, right? I don't care.
Yeah.
Right. I don't care. It went down, right? Fundamentals matter, but how the collective market participants are responding is ultimately what matters. That's the reality. and it did go down. And that's the big move, right? And there's, for my analysis, right, let's look at that big move down, we've all noted, and said, wow, that was the impulsive move. Here's the correction to it, right into a Fibonacci retracement, right in the middle. And now a little bit of weakness, it's breaking down. So my next trade here would be a short on this, and we can, if that's the top, and it looks like it could be the top of the correction, I can run a Fibonacci extension and give it a target zone down below 13. Now it's got the Ichimoku cloud, it's got the 200 as potential support areas. It's got to break through those, but if it does, it's, you know, just the probability is more lows down below the previous low, down there below 13. That's my take on it. So there we go. I'll buy those puts too, I guess. Right, and that's all right. I love having different opinions on the show. That's what makes it interesting. But let's roll. Let's keep moving to AVGO now. And we'll just keep the same batting order.
All right. So Broadcom had a really nice day today. That's a pretty big move. It looks really strong. It looks like none of the sell-offs have really been met with any real selling. I wish it didn't go up so much today. Otherwise, it would be even a better opportunity to get long. But this looks like a very strong chart. So if I wasn't in it, I don't know if I would get into it after today, but I wish today didn't happen. So if this never happened, this big green candle, this would be a pretty big buy because it's starting to get some really good price agreement at pretty high levels here. So I'm pretty bullish on it.
All right. He likes it long. Michael.
I do not disagree with what Stephen just said. You know, if you wanted to buy it today, you missed today. But Stephen, I think you might get a second chance here because I pop it out I look at a weekly, and I'm looking at the weekly, and coming off that high at 285, it's done a clean move down, and then a very small, with today completing that C wave up, which means we should get another larger decline, not huge, but a larger decline down. And so and then I agree with you, stock becomes very bullish. Broadcom's a huge company that's constantly on the forefront. You know, they've got stuff out there. So I think it's like, yes, it'll make its adjustments and reevaluate. But you got a chance that it's going to come back below 260 and might even get down as low as 240, 240-ish. And then I think you jump in.
All right. And Jim.
Yeah, it looks like it held that 255 support, which was the last 6 months' highs. When it ran up to 285, wasn't he on TV with Trump about all the jobs he's bringing back to the States or something? Yeah. Wasn't this the guy who did that? And he bought a company, and a lot of action with this company. A lot of merger acquisition stuff. And so the thing here is, you know, your 240, 250 area should be worst case scenario. And if it blows out the 285, you're off to the races. And the volume has been picking up steam. 50-day volume, 3.4 million shares a day versus 200-day volume of 2.7. So money's coming in.
All right. Well, I think I agree with just about everything everybody said. And, you know, I said up front that I'm a swing trader. I'm not a trend trader, right? This is a trend. I hate getting into a trend late, right? This thing's been going up since early 2016 is really when this bull move started. It's too old, too mature for me, right? Can turn at any moment. It could double. I don't know, but that's the problem. I don't know, right? So I like to see evidence of a new trend forming or a trend ending and a correction beginning or something like that. And so it's a very mature trend. It's going up. It's beautiful. And when it starts breaking down, I think Michael mentioned about 240. That's right where the 200's at. So that probably is where it'll find support. It's sitting on the Ichimoku cloud right now. If it breaks that, the next support area could be, you know, about 245 to 200. But the uptrend continues. It's unbroken. And there it goes. Beautiful trend, right? But my entry was back here, you know, back in 16 or even early 17 when it channeled for several months and then broke again. These long mature trends, it's just not my thing. right? Because when are they going to end? There's just no, you know, again, I'm in trends several weeks up to a few months, and I'm just looking for trend changes primarily. So that's my deal. But it's a beautiful trend. How about Dick's Sporting Goods? You know, we got one of those in town, and
For how long?
that's a good question, because they put in a you know, there's a Big Five, and there's a REI, and there's a Cabela's, right? And this place just is a ghost town. There's nobody there, right?
And it's huge, though, right?
Oh, of course, yeah, it's huge and expensive.
In other words, I mean, these places are enormous, and they don't have that many customers, and they got more merchandise to choke a horse. So I don't know how long that game lasts, but you know, we'll have to see.
Yeah. So yeah, tough sector to play in for sure. Pretty thin margin, I would think, but we're all technical guys here, I think. So, Stephen, what do you think here about Dick's?
Yeah, I used to love going there and hitting balls in the golf simulator, except I don't know if they even have that anymore. So I rarely get interested or involved in fundamentals. However, I just think that this company is really struggling, and right now it's very much at the low end of its range for the last year. I'm not interested in getting long a company like that, like this at this point. The only thing I would do is if there was some sort of a bounce to maybe the 35 level, I would be interested in getting short it, but not at these levels. I wouldn't get short when it's down this low. I'd wait for it to come up a little higher and have an opportunity there. I wouldn't get long at this point. So if there was a little bit of bounce, I love to get short. If there's none, then I'm not going to touch it.
Here we go. I take that as I don't like it.
I don't love it right here. If it gets higher, I'm going to love getting short it. Yeah.
Yeah, there you go. All right, Michael.
This is going to be real easy. I totally agree with you, Stephen. If it goes higher, you're going to want to short it. And I also think if it breaks 27.5, I'd probably start a position. I'd look to sell some there if it really broke it, because it would probably drive it much lower. A lot of hope for this one, so I'm selling it.
There we go. And you can see these gaps look like they're about every quarter. Those have to be earnings, right? So just you could probably go trade the next earnings, right? Go short and not do too bad, right? It sounds like they've been disappointing people on a regular basis here for some time. What do you think, Jim?
Well, there's a gap up there around 35, so going up towards that number makes some sense. You know, it has gone from 23 ballpark to where we are here at 29 since November. So it's had a good pop, and the volume on a 50-day versus 200-day volume is higher by about 20%. So the volume coming here pretty good, and short interest is at 10% of the stock is short. So the bottom line is that there are some people who could still cover some shorts here, and that's probably why another $5 on the upside is possibly in the cards. And then after that, the reality that people buy their stuff online, or they buy it, you know, anywhere they want to buy it. You know, like I say, I went into Dick's because they had some Nikes on sale for my son, and I was almost overwhelmed by how much stuff they have in those stores. You know, it was like a sports chalet on steroids or something. You know.
At least you didn't have to stand in long lines. That's a good thing, right?
Yeah, that's true. But if I paid rent, I'd probably say I probably have too much space here. And if I had to carry inventory, I'd say I got a lot of inventory tied up here, you know?
Yeah, I bet Amazon appreciates them having all the stuff on display so people can go feel it. Go home and order.
So people can go buy it online. Yeah, right.
Yeah, that's awesome. You know, for my Elliott wave, you know, this big move down was impulsive. It looks like it's trying to correct. It's got some resistance up here to 200 at about 35. I think that level's been mentioned. So probably won't even make it into a full retracement. So, you know, I'm still bearish on it, but not excited about it. I'm not taking a position in Dick's right now. It's kind of neutral. You know, I think it's overall bearish. There may be a little bit more movement up before it starts back down again, but it's not enough for me. I'm not loving it. And it doesn't sound like anybody else was like, man, I'm putting on a position at the open tomorrow. I didn't hear anybody say that, right, on DEX.
No, you got to be careful shorting stuff that's already dropped through the footboard. So I think Foot Locker kind of showed you that one, huh?
Yeah.
You start shorting things that are already in the abyss, and the next thing you know, from 28 to 48, and you're getting new dentures, you know?
Yeah, and it really hasn't gone down enough either to start a real bottom. You know, I like something like GE, man. That's worth watching for a rebound.
Yeah.
You know, something that's just been crushed forever, right? And this isn't quite there yet, but the momentum to the downside, it probably is bullet bearish. Momentum's going to slow. You know, I just think there's better trades out there. Let's go see what we think about the boys at Goldman here. Right? What do you think about Goldman Sachs?
All right, so Goldman Sachs, high end of the range. Looks like they have earnings in about 2 weeks, so it should be kind of interesting. I would say with a little bit of a deregulation, if we do get a little bit of a bump to interest rates, this will benefit a company like this. So I wouldn't go ahead tomorrow morning and place a trade in Goldman Sachs. However, if come earnings they did sell off a little bit, I would definitely be a buyer at that point. But today I wouldn't do anything.
All right, neutral on. I like that Goldman Sachs. There you go, Michael.
Well, being that I don't know who else listens to this show, I'm not going to tell you what we used to call this. Sachs, but it was a similar. You just have to change a few letters. I think that Goldman Sachs is a company that basically has their hands in every single bond sale going on globally. And when you said government Sachs, I mean, it's true. They control and operate all of the government bonds. Pretty much, I'm sure that I don't know how many states, you know, they're in there and they're the ones that cut the deal. So they sell all of the state bonds, municipal bonds, and the government bonds. So with that in mind, I think that the company is just overinflated in terms of its own ego. But they have a lot of power, and keeping that all on the outside and just taking a look at it technically, I have always felt that Goldman Sachs is going to remain strong because they got their hands in everything. Continue to keep their hands in there. So wait, because what we've already said is I think the market can pull back a little bit here, 250, and then maybe run again.
All right, Mr. Kenney.
Goldman was a very good buy a month ago in the 234 range when I was on the show, and me and another gentleman were talking about it, and then it ran way up there, and now you know, it's pulling back because of the loss recognition acceleration that they did, which has supposedly hurt Q4 earnings. So that's pretty much the reasoning that they pulled it back. I know technically it's overbought and it's pulling back for that reason as well, but the underlying statement was about that they accelerated their write-off because of the tax law change. And I was wondering out loud if that is going to hurt Q4 earnings on many companies, if many companies are played the game of accelerating loss recognition at the end of the year, and people are looking for these big earnings in Q4, and wouldn't they be surprised if the earnings weren't that good because they did a lot of this loss recognition? We'll have to see if that means anything. But anyway, as far as this company is concerned, let's face the facts. We've had deregulation down there. You got Gary Cohen down there. You got Mnuchin down there. Leverage lending is going to be wild looking forward. Who plays that game? Goldman. They have a whole conference in San Diego on leverage lending. And then the repat money that comes back that could be used in takeovers, they're going to be in that game as well. Their PE ratio at 12 to 13 is certainly not expensive. So anywhere between 230 and 250 is probably a gift.
All right, Rob. I like your discussion about earnings and the potential for you know, people pulling expensing and stuff back into 17 at a higher rate potentially. Earnings, it's all about the footnotes, man. I like to say with tongue in cheek that earnings statements are the finest fiction in our modern era, right? Earnings are just so interesting. So here's an assignment in business school that our accounting prof gave us. He gave us, I think it was Boeing. He goes, tell me how much money Boeing made in the last quarter. It's an impossible question to answer, right? It's an impossible question to answer. It's not earnings. It's not free cash flow. There is no answer to, what a major corporation, how much money they made. There's just no answer, right? It's astonishing. But you got me off on a riff there. So they may play some games with, where they recognize earnings back into a higher tax year, and it'll all be in the footnotes, man. And people that pay attention to earning have to be able to read an earnings statement and go model all that out and back all that out. I'd rather just look at the chart, the reality of how the market's responding to all the known information. Goldman is a classic. I mean, you don't get a better Elliott wave presentation. From July of 16 up to early 17, a huge impulsive wave 3, a perfect correction into a Fibonacci retracement zone right down to the 200, reversed and is in wave 5, a continuation of that original trend with an extension of target zone over 281. Could pull back to the cloud. It could even pull back to the 200 at 230 and eventually work its way up to 281. Pretty long, there's some profit left in there. If it gets a strong reversal, even pulls down to the cloud at about 249, 250, reverses strong, I wouldn't mind a long on that right now. It's just a classic technical continuation of that original trend, and it's off to the races, man. Well, we've done pretty well. In about half an hour, we knocked out 5 and explored them in some good depth. Let's go around and nobody's given a really ringing endorsement, any of them, right? We've all been lukewarm on these, right? So let's treat the folks watching to something exciting. So why don't we each go around and just, hey, what do you like, man? What's got your pulse rate up? What trade are you looking at right now that you think is the home run? What do you got, Stephen?
So I was really excited when I found out the opportunity to do this. So what I'm looking at right now is USO. It's the United States Oil Fund. So oil is at a 2 or 3 year high right now, which consequently leads this stock, which pretty much tracks the price movement of oil almost 1-to-1. I think it's like an 85% correlation. So we're looking at right here is number one, something I look at is a price extreme. So it's not only is at the very high end of its 1 year range and 2 year range, it's also over the last 10 trading days up over 5%. So that's kind of an indicator of not only a long-term price extreme, but a short-term price extreme. And I love getting short this stock, obviously, because there's negative drag against the price of the stock. So I love selling USO when it's up, and this is an unbelievable opportunity, short-term and long-term, to get some sort of negative bias on a stock that has a negative drag against it about 80% of the time. So this is something that I'm really excited to do. I put on a position today already, and I'm looking to add to it if the opportunity presents itself.
There you go. I love your passion, man.
Pumped about this one. I got to tell you, I'm jacked up about this one. I rarely get to see stuff that is like a really good setup, which probably means it won't work out. But it again, long term, or excuse me, on the 1 year, it's at a price extreme. In the last 10 days, it's at a price extreme, and it has an 80% drag to the price of the stock. It has a negative drag 80% of the time. So there's no better time that I've seen over the last few years to get short this stock than right now.
There you go. And I love the volume and I love the depth of the option market on USO, man.
It's super liquid.
It's liquid.
You could do whatever you want, whenever you want, at whatever price you want. I mean, you could get really in there. Let's see, today
10 million shares, all you can eat, huh?
Yeah, so all you can eat buffet on the stock. You still get an all you can eat buffet in options. So 53,000 contracts is big boy numbers for sure. It's not as expensive as a stock, because the negative drag against it. However, I mean, you can get in there with any size you want, whenever you want. You can go out as far as you want and still have the same type of participation that you get short dated. So this is like a home run setup for me.
This stock is interesting because you got stock trading at 12 and the 200 days at 10, so you're 20% above, which some might say is a little extended. But you've got 38% short interest. So this is a heavily shorted stock, apparently. And the volume is weird in that the 50-day volume on this rally is only 14 million shares a day, ballpark, 14, 15, and the 200 days at 23. So the thing's had a big advance on volume that it looks a little sketchy. It's 20% above its 200-day average, but it's got almost 40% short. So, yeah, I mean, obviously it could do just about anything from here. And down would, is as good a bet as up as far as the way the technicals are.
Yeah, I watch oil in my live trading room, and you better be a seasoned trader. You better have some risk management in place if you're going to trade oil. That's my only thing, right?
Yeah, this thing could get wild. I mean, 40% short interest. People start covering their shorts. You don't know what's going on, and it is trying to break above 12, which was kind of resistance. Yet the volume stinks, and it is 20% above its 200-day average almost. So there's a lot of offsetting penalties going. A lot of flags being thrown out there, but it could be on both teams. You know what I mean?
There's a big prior high at 1250 coming up pretty quick, and it could reverse right down off of that, I think.
Exactly. Or if people were, if oil popped to 65 for some reason, you got a hell of a lot of people to cover short. So that's what makes this thing pretty exciting at this area.
You're typically going to see a large short interest.
They're using it as hedging,
regardless.
Yeah. They're using it as a hedge or something. Or?
No. So what it is I don't want to take too much of everyone's time, but USO, the price of USO is not priced off of something physical. It's priced off of the crude oil future contracts.
Okay.
And for people who are watching, this is the symbol /CL for the crude oil contracts. And where you have options that expire, you also have futures contracts that expire. And the price of futures contracts that are closer to expiring, if this ever loaded, are priced differently than those that are further away. So you could see the most active contract expiring 20 days from now is priced at $60.42. However, something further out is priced less. Now, this is something that's called backwardation that only happens about 20% of the time. Something that happens 80% of the time is contango, where the price of the contracts that are closest to expiring are priced lower than the ones that are further away from expiring. So the long story short is the people who manage USO have to maintain a certain amount of futures contracts. 80% of the time, they have to sell something that's priced lower than what they're buying. That's why there's a negative drag to USO 80% of the time. And that's why there's such a big short interest all the time, because it has that negative drag against it.
Right. That's a good.
Very well said.
That's a good discussion. And I get people who ask about, USO and even some of the oil 2x, 3x leverage things or gold leverage things or whatever. And my answer is you better go understand the nuances.
Yes. Again,
right, of the contract pricing and their rolling and how they settle and all that stuff before you jump in, right? Because you can get burned.
It's very similar to VXX is the same thing, and people say, how can something like the VIX, but VXX that's priced off of the VIX look like this? And it's a very similar scenario where it's not priced off of what you think it is. While it can happen, you can see we get a little bit of blips ups, is very limiting to what you can actually do for real reasons that, like you're mentioning, not a lot of people have an understanding about.
Yeah, so that is important. You got to know what you're trading, man. Well, it was a good one to bring up, Stephen. I'm glad you did.
My bad.
No, it's good. You're good, man. So, Michael, what do you like right now? What's got your pulse going?
Crude oil and gold. I was just going to add I trade crude oil. And I'm looking very strongly that we could. I like your idea, Stephen. I agree. I would start shorting now, but continue to leave some room because I think you're going to be able to scale in. Can go up towards 65 to 66, which is going to make that USO trade even sweeter. Gold is on a tear. Gold's not coming down for a while, but I think that they're going to push it. They may try for 1,400. And then bring it back in. But again, my style of trading in both crude and in gold is not really based on to go to 1900 again. Do I believe that? Yes. But your guess is as good as mine as to when. I think that crude oil, when people ask me, do I think crude oil will go back to 75 bucks? It's like, well, sure, but it depends on who's going to push it. You have a lot of companies that they don't make money dollars as much as they make above $75. But again, I don't really care. I just think I like what Stephen was describing. It's like if you understand your product, you understand what makes it tick, then you can be able to trade it whether it's at $12 or whether it's at $5. So you will know what you're going to do. So currently, I'm going to agree with all of you guys. I may just go do this tomorrow because. So I think it's a good trade. And for gold, one of my core positions is I'm long gold. But I have been long gold for more years than some people are alive. So I continue to like it.
I've traded gold since I started trading. I love trading gold up and down. Gold's fun. It moves, man. And it's an orderly market, right? It moves with some order, right? So I like gold too.
Well, I have to tell you though, Dean, some days those orders are like knock everybody else out of your way.
Yeah, but I look at I'm focused primarily on daily charts, right? Not intraday. And gold has been on a tear, man, and
it has.
It's actually looking pretty bullish. I like it. I like it too. It's up above all key resistance. It could be good. Could be really good.
Yeah.
Yeah. Jim.
Yeah.
What do you like?
I tell you, if you recall here, I've been kind of on this train a little bit here with regards to the gold, oil, and commodity-based currencies from the standpoint of, the idea here is the inflation, according to what Yellen had said, those numbers she believed was transitory, which is a big fancy word for they're going to change. And then the U.S. dollar, I had been listening to some pretty, in my view, sharp people who had said that they thought the dollar would lose value. And the bond market is holding on by the skin of its teeth. And I think today they mentioned that the bonds are discounting an inflation rate way better than 2%. Hey, let's get real. If anybody's been in the game for any kind of time, you can't have inflation pick up and have interest rates at 1 or 2%. It's going to be a problem. And then you got all that debt that's at negative interest. People are going to want to get out of that movie theater if they yell out fire, and that is going to be a very crowded door. Now, like I say, in the beginning of last month, I was talking about taking a shot at Freeport-McMoRan, and it went from like 14 to 20. 2 weeks ago, I'm on the show. I said, take a look at the Barrick. Might go someplace. Who knows? Take another shot. 14 goes to 15, 25. Looks to me like the trains are trying to leave the station here, and it looks to me like the Fed might be caught with its pants down as the tides change. They're going to find out they might be swimming naked out there, like Buffett says, when the tides change, you find out who's swimming naked. Well, the Fed might be swimming naked if they're in there at 1 or 2% interest, and we start getting some kind of a real inflation number that people are not ready for. So, and it's not a coincidental. In January 2016, oil bottomed, Australian dollar bottomed, gold bottomed, and Canadian dollar bottomed. So for the last 24 months, this little baby's been cooking, and it's been bubbling, and it's been bubbling, and it's been bubbling. 2018, we got a guy in the White House just gave away 40% of the revenue by giving all the corporations these permanent things under the concept that they're going to bring the money back and donate it around to all their employees. And, I think that is, going to turn out to be far-fetched. And these growth rates, if they do kick in, they're going to be accompanied by some price inflation. And so I just think that the big story here, if they're going to call it the Wayne Gretzky trade, if you want to skate to where the puck is going to be, I think that the puck is going to be surprising people, and the bond market is going to get some spike marks on its face.
I have to tell you, from your mouth to God's ears.
Well, that's the way it looks now, in this crazy world. They can change the rules on everything at any time, anywhere. If they can print $4 trillion and buy their own securities and print $4 trillion and buy the S&P, then obviously the game is a difficult game to work with. But the way the cards and the tea leaves look right now, it looks like the inflation numbers may pick up. It looks like the dollar's a little shaky. Looks like the bond market's, a little bit shaky. And if we get above 260 on the 10-year, you could be saying 3% before you could spell it. And then people who own bonds at zero interest and all that stuff may say, I think I want to get my money out. And they could find a little echoing effect when they go down and say, what's the bid down there?
Right. And my other core position is that I'm short bonds. I'm short bonds, long gold.
Well, that's the way that's where the technicals are pointing. That's the way the fundamentals seem like they're pointing. And that's where, and Bloomberg just came out with a very interesting chart, which showed that the relationship between stocks and commodities has never been, or at least in history, is one of the best valuations for the commodity sector versus the value of stock. So, if you're a kind of guy who'd like to buy something on the cheap, you're taking your shot. And I'm not in a party of one. How do you think Freeport got to 19? And how do you think the gold's pressing 13.20? Rather than going, So, you never know in this game. You try to go with the flow, and you try to, think logically what, might work out. And in my view, the dollar being in some kind of trouble, the bond market being some kind of trouble, inflation being a little bit higher than people thought, and and some of these things that are historically inexpensive, they may get a bid, and they may get a rotation. People might want to get out of something that's extensive and throw their hat in the ring on something that's not. And like I say, it's not coincidental all those markets I just mentioned bottomed in January of 2016, and it's not coincidental they're building steam right now.
I can't wait till you have an opinion, Jim.
And I always temper it by, and by the way, I could be totally wrong.
Right. That's right. You were talking about bonds. I've been watching really, really close, both TLT and AGG. I like AGG as a short setup here. It's a iShares Core All Bonds ETF, trades at monster volume. I think it's a nice short setup. Right? I'm looking for a new low, about 108, under 108, but it could go down under 106 in a flash. I like it, but that's not my trade. Let me show you the trade I like right now, and it's one I showed a couple weeks ago. See, I can play back to do the rewind as well, Jim. So I think you might have been here, Jim. So I was calling out Halliburton as a good long. I said, hey, Halliburton's a good long if it can break above these 4 times it came up here, right? Here's wave 3 back in all of 16 into 17. Here's the correction, perfect Fibonacci correction, and then clear evidence if it could break these, this 4-time high. I said if it broke at about 46.22, it's off to the races. And here we are. We're in this trade. It's at 49.61. It's got a target up here above 57.65. It's just a classic. There's wave 3, 4, 5, using Fibonacci extensions, and off to the races. We're in some nice profit. There's still plenty of room to get in. Halliburton, long, baby. Let it run. I like it. And it's looking really, really good. I was going to show one other one too, just for fun. That's not it. Oh, it's on the list. I'm long Valiant, man. We're in nice profit on Valiant, and it is, it's not going to be smooth. It's volatile. But look at this thing breaking up off that bottom, right? Correcting back up after years of being the poster child in presidential campaigns for overpriced drugs, right? This thing could easily get to 30 or well beyond 30, right? Boom. So Valiant, I really like it. We're long Valiant. We're loving this. Let's go back to our list. We finished Goldman's. Here's this one I never heard of, NTNX. So let's go ahead and take a look at that one and weigh in here.
Yeah, I'd actually never heard of it. But let's see. Does anyone trade this? NTNX.
NTNX, right? Household name.
So we had 2 million shares. 2,500 contracts. People definitely trade this. Very mid-range, high end of the range. Looks pretty strong. I would say, hey, if there's, I don't have a position in it. Again, this is the first time I'm hearing about it. On any pullback, I think there could definitely be some interesting setups, especially if it could somehow get down to that 30 area to get some long exposure. So I wouldn't touch it right now, but if it sold off a little bit, I think this would be a great play to the long side.
All right. And Michael,
I always like stocks that tend to rally off of slightly improved earnings. Tanked. Then they came out with recent earnings and it hits that high at 38.28 when it says it only lost 20 cents. I don't really know anything much about the company, but on a technical basis, it's 32.5, 33 down, maybe close to 32. And then that should hold, and then it rallies until next earnings when they report that maybe they only lose 10 cents. I don't know.
Yeah. All right, Jim, NTNX.
Yeah, it looks like a wild ride. So this would be the seatbelt variety.
Yeah.
$23 is your 200-day. It's up at 35, so plenty of real estate between there and the 200-day. 50 and 200 are inverted. The company is losing money, but has about 11% short interest. It seems like one of those companies that people will be betting on, if they're going to bet on it, on things that are going to happen way down the road, a la Tesla or something like that, where people are just saying today is of no importance. Over the hill, around the bend, Shangri-La exists, and so buy as much as you can. That would be the only mentality I could see right now. It's a software company, so obviously they must have some stuff people are interested in. But as far as the economics of it right now, it's a pretty wild ride, and wouldn't be my cup of tea.
Benjamin Graham is the father of value investing. He's the one that had the biggest influence on Warren Buffett. And he said, in the short term, the market is a voting machine. In the long term, it's a weighing machine, weighing earnings. So people are clearly voting, right? They're drinking the Kool-Aid. I don't know much about it. I have no interest. Everything you guys said made total sense, but I ain't trading it. No trade.
It hasn't been around for long, but it certainly has been a very wild child.
Yeah. Well, here's one that's been around, and it's AMD. I used to work for Intel. I worked for them for a long time. It was a great experience. And they were like the Russians for us during the Cold War. But now they're working together. They cut a deal, right? They're collaborating. Unheard of. What do you guys think about AMD?
All right, AMD. For looking at the 1 year, it actually looks like it is trying to find the third bottom of the year. I do have a position. If it sold off a little bit, I'd probably be interested in some sort of a covered call and hold this hopefully until I make a little bit of money on it. But again, on that 1 year, it's kind of bottoming at similar levels that it's at now. Had a big day today, so you kind of missed the boat today. But on any type of a sell-off, it could become interesting to get long, and I like a cover call. I think there's a ton of liquidity. Yeah, 44 million shares, 133,000 options contracts. So you can definitely get in there with some sort of covered call if there's a little bit of a pullback, or I'd consider it at least.
All right. Michael.
Near and dear to my heart is AMD. I traded AMD as a market maker. A little bit longer view. I go all the way back to 2000 when the stock hit a 48.5. I think that the entire correction, and it's a 17-year 16-year correction. Am I like not being heard? There I am. Yeah, I think the stock can pull down a little bit, but I love the fact that AMD continues to reinvent itself. And in doing that, it always comes out okay. And so I'm actually bullish on AMD right now.
There you go. So here's the big question. Will you buy a computer with an AMD chip in it?
Are you asking me that question?
Anybody.
No.
What computers have AMD chips in them?
Lousy laptops. Low end.
Well, I assume they don't have them in MacBooks?
No.
Then no. We'll be buying one.
Right. I'm a total Apple.
Yeah, I mean.
Oh, wow.
Aren't they popular in gaming computers?
AMD, yes.
Graphics chips, not processors, I think. I don't know. I worked for Intel for so long, I just can't do it. I can't go buy an AMD chip, right? Trader.
Yeah, I own Intel too.
Yeah.
Yeah, this thing looks like it's trying to turn around. If it can get above 11 1/4, that's that recent high to the left of where we are right now. Who's to say under certain circumstances it could try to not make a run for that big gap between 13 and 14 that occurred when everybody got the heck out. So if it can get above 11 1/4 and then 12, boom, you got some momentum going there. So right now it's it's right on the ledge here, and one more big bang to the upside and it would do pretty good. But like I say, it's another one that's pretty rangy, 9 to 15 back and forth. So it is in the lower end of the echelon there, but not something that I would have too much feel for.
So here's what I love about AMD, the stock, is I like to pay attention to percentage, right? And so here's the big impulsive move, right? Here's the correction right into a Fibonacci retracement zone, and it's starting to show some signs that it wants to make this next move up into a Fibonacci extension zone up above $17, right? I would want to see it break the Ichimoku cloud, break the 200. So looking at an entry at about 12.30, 12.5, somewhere in there when it breaks. But that's from 12 to 17 percentage-wise,
huge,
is a monster, right? That's a monster. I was looking at AGG, right? We're looking at $2 on a $108 stock. Well, it's high probability, but percentage-wise, not that impressive. This is, from 12 to 18 is a big move, right? That's like 50%. Right, and it's pretty cheap, and it's traded 44 million shares today. The option market is as deep as you'd want to be, right? So you can trade this thing. I just like to see it get this move going, and man, I'm a buyer. I'll go long this thing, even if I won't touch their chips. So I'm kind of excited about that. I'm waiting. It's not quite ready yet, so that's all right. But that's my thought on AMD. Kind of exciting. Where are we at on time? We're almost out of time. We made it through a good handful of these things, seven, and we all offered up some good ideas, and we had deep discussion around everybody. Right? We critiqued each other's picks pretty thoroughly, and that was fun. But let's go ahead and wind it down. What we'll do is go around the table one more time And just if you got any kind of closing thoughts on the markets, if you'd like to put up a link or a website, people to get to know you better, or something you'd like to share there, this would be the time. So one more time, and Stephen, take us home, man.
Yeah, I just want to thank you guys. I mean, this was so much fun. I think I learned so much. So thank you to David and Dean for setting this up, and Michael and Jim. Your guys' insight was really awesome to hear, especially, you know, again, guys, there are people on this call that are successful, and they all have their own ways of doing it, and that's what makes it so exciting. It's the same thing. It's the same screen. It's the same. Pretty much your whole life revolves around like 20 symbols, but within every day it's different, and that's what makes the market so exciting. So again, guys, thank you so much for a big thank you for being on this call, and for the people who are tuning in. If you want to chat, if you want to learn about me, if you agreed or disagreed with any of the things I said, or liked any of the things I said, for everyone on this call, I'm offering you guys a free 30-minute one-on-one phone call with me, no strings attached. You can go to stephenbrooks.co/one-on-one and sign up absolutely free. I love talking markets, would love to hear anyone's feedback. And again, thank you guys so much. This was so much fun.
All right. Hey, it was good to be here with you, man. I really appreciated your insights and your thoughts, man. It was fun. So, Stephen, thanks. And I look forward to being on the show with you again, man. And people should take him up, free one-on-one. Why not?
Absolutely.
Right? Go his brain. Find out what he's going to say. All right, Michael, wrap up thoughts there.
My final thoughts are that we're screaming to a major high, and that's in the broader screaming. I mean, it's. I've been waiting for the blow off. We're getting it. The NASDAQ is fulfilling my dreams, and I don't think there's very much left. And so I think that I very much look forward to a lot of people. Sorry to say, but I do my best work in a panic. So, or when everybody else panics. Now, as far as people getting a hold of me, I'm still in the process of revamping and redoing my website. I do have a trade room, but I'm switching it to I'm going to have coaching only through the trade room. And I'm going to provide, not necessarily an advisory service, but I write commentary every day about some particular markets, and that'll be up there. Get a hold of me.
Uh-oh. Freeze frame.
And I have algorithms. I've had a lot of algorithms written for me, and so I'm kind of like continuing to work out the bug, work out settings. I'm very confident in what I have right now. I turn it on in the morning and just leave it alone and let it do its thing for me, and then you go have that third and fourth cup of coffee. But in the coaching, I also deal with, just helping people get through just a lot of the mental problems, a lot of the stuff that goes on between traders. And, when you're sitting and you're basically isolated these days, everybody needs a little hand every now and then.
Yeah.
Give me a call.
Awesome. Yeah, people should take you up on that as well. Trading, you can get it, it is a lonely endeavor. You can kind of, the echoes in your head can start to get weird, man. It's good to have some people to talk to. Jim, closing thoughts for you, wrap up.
Yeah, sure. Just you can shoot an email to optionprofessor@gmail.com if you have a question on something. My feeling is the second half of this year is possibly going to see volatility pick up in stocks, and knowing how to do collars, which can be used as a hedging strategy, or being able to figure out how to do the married puts could come in very handy. And we got possible reduced central bank accommodation, Fed unwinding. You've got leverage levels that might come down. You got valuations that might be tough to keep up. And so if all those things occur, the second half could see some volatility pick up, and knowing how to hedge or protect your assets with some of these strategies could come in handy. So investigate before you invest, as always, and then shoot an email if you have a question.
All right, outstanding. Man, options are awesome, and the more people can learn about options, Jim, the better. I just love it, and there's just no end of the strategies you can employ there. A lot of legitimate stuff. Very cool. So again, I'm Dean Jenkins. Follow Me Trades. This is my website, followmetrades.com. And my flagship service is a stock advisory. So I publish stock picks and corresponding option trades. I believe in complete transparency. We've got our track record there and details of every single trade. You can click on any of these years and see every single trade I took and what the win-loss ratio is, payout ratio, all the stats. Right? Not every trade wins, but we are consistently profitable, and that's what ultimately matters at the end. And people want to find out more. A good way to do that is get my free newsletter. I call it Beyond the Noise, weekly market update. And of course, you can send me an email. There's a link here on the website. But yeah, check out the newsletter and get to know me better. See if what I'm doing is a good fit for what you're trying to accomplish. Well, hey, thanks. It was great to be here with all of you, Stephen, Michael, Jim. And David, thanks for working with me to help set this up. And we'll go ahead and turn it over to you to wrap it up, man.
All right. Thanks, guys. Great first show of the year. So just want to remind everyone watching, be sure to hit the YouTube subscribe button to get updates on future shows if you haven't yet. Also, we will be back to our normal show lineup for next week. So be sure to join us for Crowd Forecast News on Monday at 1 p.m. Eastern Time. Tony Hansen will be on for the first time. Also, Larry Gaines, Glenn Thompson, and Rob Hanna. And then on Tuesday night at 9 p.m. Eastern Time, be sure to join us for the next episode of this show. And I just want to thank all my guests again for this week. So Stephen Brooks of stephenbrooks.co. Thanks for joining us for the first time tonight.
Thank you.
And Michael Filighera of logicalsignals.com. And Jim Kenney of optionprofessor.com, and Dean Jenkins of followmetrades.com. Thanks, everyone.
All right, thanks.